Hey guys, it's been a few days since we've chatted. This is Mike O'Connor. I use Chaikin Analytics for iPad as a trend trading tool, and I've been trading with it for a few months now, and I'm an affiliate of Chaikin. It is a great software program that allows you to distill all the fundamental and technical parameters that you might normally aggregate into kind of one set of indicators with buy and sell signals. Remember, I'm not a licensed financial advisor. I can't give you trading advice. I don't believe in elbowing to give people tips. I just trade with this because it works. I'm an evangelist, and if you sign up for a free trial on my Facebook page, yeah, they will kick me back a couple of bucks. So that's kind of nice. But really, I want to be able to trade with you so that we can make money together, because I'm sure there's as much for you to teach me as there is for me to teach you. I'm an everyday Joe. I'm not a pro, though I love talking trading, and I definitely network with several certified financial planners and regular traders who, like me, have come to appreciate all of the ways that Mark Chaikin has helped investors and traders make money in the market. And his latest invention is really an aggregation of a lot of great ideas and contributions he's made to trading over the better part of his career, consolidated in a new platform, the iPad. And he's back tested the thing, and he's forward tested the thing for a couple of years. I've now forward tested the thing really during choppy market conditions, and I'm incredibly happy with my personal trading results. And the paper trading results have been good. We have a portfolio of naked puts and a portfolio of long stock trend trades, both of which are doing extremely well. And I just want to get enough different positions in the portfolio before I share it with you, although my Facebook page will always document all of my trade entries so that there's no way you can't hold me accountable for not following the system, which is really simple. It's using technical analysis to determine what the posture of the market is, and then to find the strongest sectors. And that's really the only thing I do outside of the app. And then in the app, we're just looking for the strongest industry groups in the sectors, and then the strongest stocks within the industry group. And then finally, we look at indicators to get our timing down. And we're going to go out to the market first, because I always like to do that. Oh, sorry, there's a little bit of my day job there. I guess I should clean up my act before I come to play with you guys today. I always look at the market. We look at it on different time frames. We'll start with the long term, and again, I keep harping on this, but this is where we hit our head in 2000 and then went into a recession. This is where we hit our head before the credit crisis of 2008, and here we busted through that overhead resistance. This is on monthly bars. We've come back, and in fact, on a monthly basis, we've bounced. That's a really bullish sign. On the weeklies, we've been following this monthly trend, and I had been concerned because we did pull back to this former resistance as new support, and we're kind of far away from this upward trend line. And the Fed was scaring the heck out of us, and we all thought we were going to go maybe down or sideways for the summer. We've had a really strong rally right up to resistance, and then we're at a critical point now. And of course, I've been harping on this, that I basically dropped my short-term bullish stance and went neutral, and even at one point bearish. And I got busted by shorting the futures a little bit in anticipation, kind of breaking my own rules, and I definitely paid the price. I've gotten out of that position, but still, that doesn't change my market posture. Despite the massive rally we've had and all of the Federal Reserve gum jobs to get the stock market headed in a positive direction, interest rates down, we are still at the very top of resistance here. And so there still could be a little bit of headroom. We could have a flagging pattern, for those of you who are technical, where we go sideways for a few days before we break out. We could have some kind of series of negative earnings reports that might pull us back down. But overall now, I'm a little bit more bullish than I was. Keep in mind, though, our sales trading volume has been significantly higher than our buying trading volume. So again, my stance is neutral, and I'm going to continue to position size slightly more conservatively so that any new bullish trades I take will be with half of the risk that I normally take. All right. So that's the background. That's how the stock market is doing. The other thing I like to do is check out sectors. And me, in that I really only like to look for bullish trades in stocks, domestic U.S. equities that are overperforming the S&P 500. And I look in two time frames, the most important of which would be the 6-month time frame. And you can see that the significant sectors that have outperformed the S&P are consumer cyclicals or consumer discretionary. That has been absolutely the best sector to be in this year. And healthcare, which has come down a little bit, but still is relatively strong. Financials, which seems to do better when interest rates go up and pulls back a little bit when interest rates retreat and bond prices go up. This one is snuck up now, consumer staples. When the market was pulling back, institutional investors got a little bit defensive, and so suddenly the ETF like the XLP, which tracks all the consumer staples, is up. And of course, industrials, which has been making becoming increasingly more bullish on the 6-month time frame. And of course, my rule is I want to see it do well in both the 6-month time frame and the 3-month time frame. You can see once again that consumer cyclicals or discretionary does very well. Financials do very well. Industrials do okay. And then you can see tech starting to rotate into favor. So those are the 4 industry groups on the short-term side that I look for. So really it is all about consumer discretionary and financials, and perhaps a little bit of industrials and tech if you're more of a shorter time frame trader. So that is the background. That's all the work that I do outside of the Chaikin Analytics for iPad app. The rest of it, I get back into my little presentation here where I've done some work on the market, and I have the wrong PowerPoint. Let's try this again. And you can see these are the sectors for bullish trades that I'm going to pay the most attention to, with consumer discretionary being the most attractive to me. Now, from here on in, we're going to look at everything really more from the bottom up. That was a sort of a top-down analysis of what's happened in the recent past, where we think institutional money is making bullish bets for the future. The rest of what we're going to do is to look at stocks constructively from the bottom up, where the Chaikin Power Gauge is going to tell us about industry groups and then about key metrics related to the underlying fundamentals and technicals of the stock, and then provide us with basically a traffic signal from very bearish, meaning if it's in your portfolio, get it out, or if you're a put trader or you like to short the market, then you can use this as a guide for bearish entry positions. But really, the idea is to be in the strongest stocks most of the time, because if you are in the strongest stocks most of the time, you're going to substantially outperform the market. And I don't think I deleted this, but again, very bullish stocks in your portfolio will outperform in bear markets significantly, where you see a 22% gain versus no gain for the S&P last decade, or even this last few years, where the S&P has more than doubled now in the past since 2009. You can see even very bullish stocks in that case have outperformed by incredibly 2 percentage points. So when we look at that, then what I do is something different with the Chaikin Analytics watch list. I will put all the stocks that are associated with the major ETFs that cover each of the sectors. So this particular watch list ranking is not of past performance, but rather the quality of the underlying stocks. So I put 30 or 40 healthcare stocks, which is meant to track the XLV, which is an ETF that covers healthcare, and the XLF, which covers financials. I put another 20, 30, 40 stocks in there. Basically, everything that's large cap with penny-wide bid-ask spreads go in there. And then I've done that for all the other major sectors in the track the S&P 500. And so from there, what I'm able to do is rank those watch lists. The Chaikin Power Gauge, or excuse me, the Chaikin Analytics for iPad will essentially weight each watch list based on the strength of the underlying stocks in order. And you can see this is very similar to the past performance analysis that we just did, where healthcare is number 1 and XLF is number 2. It's tracking XLK, or the technology sector, a little ahead of what we see in terms of past performance. So the Chaikin analytics for iPad actually gives you kind of an early warning signal about sector rotation. So it helps you catch sectors and industry groups that are coming into favor without just looking at how they've been doing. So that's why I love the bottom-up nature of Chaikin analytics for iPad. We're going to go fishing in the top 4 sectors. We are neutral, but really kind of with a bullish bias at this point, the way the market has been going. And the analysis just takes a second every day. Look at healthcare. I see all of the healthcare stocks ranked in healthcare in descending order from strongest to weakest. You're only seeing, a portion of the stocks because I have to use screenshots, but really nothing to trade in healthcare today. There is no entry signal for healthcare. The market's been running for the past several days. So the only type of entry signal we're going to get is some kind of momentum signal. We're going to be really cautious about trying to take a bullish trade after so many up days in a row. We'd like the market to just to sell off, even if it's just for a day or two, to give us a better entry opportunity. And you can see that when we look at technology, even though it's only recently reared its ugly head, no trading signals today. And you'll find that's true with industrials. Now we come down to the one stock that I found that is giving us a bullish entry opportunity, but it's not for the faint of heart. So 2 things. By the way, that's the end of my analysis. I talked a lot longer than it would take to check the sectors, to check the relative performance against the S&P, and then to look in the outperforming sectors to find the strongest stocks and the strongest industry groups, and then look for a buy signal. I mean, this software really does do it all for you. So the gap is one stock that we want to trade. Now, I'm not going to take your time out of this to show you this, but I will often go to a website that gives me when the earnings are going to happen. I never like to trade bullishly, or at least enter even a trend trade within the same expiration cycle, or if you're not an option trader, to put it another way, within the first 30 days prior to entering a trade that my goal is to stay in for weeks to months. Just too much headline risk. I don't have enough of an edge. There could always be a negative surprise. And I'd rather have the stock run up a lot a bit so that I have some cushion in case there is a big breakdown in the stock. So my rule is no trend trades 30 days or shorter time period prior to earnings. But the gap, their earnings aren't until August 20th, so that gives us plenty of time to ride a positive trend. Now the buy signal the gap is giving us is not a for the faint of heart signal. This is called a breakout buy. This is not to be confused with a channel breakout, for those of you who are technical. This is something where the price has to hit and then exceed the outer volatility band. And for many of us, this is a signal that a stock is overbought, especially given that the oscillator, which is sort of a cross between a MACD and a stochastic, is in oversold territory. If anything, this would be a great covered call indicator, right, to sell some premium against a long holding. But this is actually an entry signal. It's a momentum entry signal that requires 3 things to be true. Number 1, price to hit the upper volatility band. 2, Chaikin money flow to be above 0, meaning that the stock has been under accumulation. Number 3, for there to be strong relative strength. And though you can't see it on this screenshot, the power gauge must be bullish or very bullish. And over here you kind of get that snapshot. So you must have all of these tremendous fundamental and technical factors in the stock's favor before you can even consider entering when price is butting up against the upper volatility band. And that is what the signal is. It's called a breakout buy signal. Strong money flow, bullish power gauge, stock outperforming the market, meaning the relative strength versus the S&P is strong, and the stock actually breaks above the upper volatility band. So, and there it is without the breakout signal. You can see it's touching this thing here. Now, for me personally, I would never take a long stock trade. It just violates too many of my rules and my feelings of comfort to enter a stock at 43 that's run up from 40 over the last week or so. But I do think this is an opportunity to sell a naked put. A naked put is simply a strategy where you are going to sell somebody else the right to sell you the stock at a lower price at expiration. And while I haven't run the numbers on this, I probably would look at a 42 strike level. And I'm going to assume I can make, between 85 cents and $1.50 on that, meaning someone will pay me to buy the stock or take it off their hands if the stock closes at 42 or below at the August 20th expiration. If the stock just keeps running, I collect my premium and I keep going. Otherwise, I take that premium and it gives me a chance to take the stock off somebody else's hand at a discount, knowing that it's a very strong stock where the trend is likely to continue, and all I want to do is buy the stock at a discount against its current price. And that's the strategy that I would use. But again, the checklist that I would go through is, what are the market conditions? I would only risk half of what I would normally trade in a bull market because we still haven't broken out of that upper resistance level. Is the stock outperforming the S&P 500 or the Spiders ETF? Absolutely. Are we in a strong industry group? Let me go back to make that point because I didn't make that clear. But this will also tell you if the industry group is strong, and it'll tell you what industry group we're in, which is the non-food retail wholesale group. And that is a strong industry group within consumer discretionary or consumer cyclical right now. We don't have a very bullish, but we do have a bullish power gauge reading. We have strong technical signals. We did get a buy signal, albeit an aggressive one, and there's no earnings in the next 30 days. My personal preference would be to sell a put rather than to enter a long position, just because it feels like the market's got to pull back a little bit before it breaks through this upper resistance. But that's just me. And that's how simple it is to use Chaikin Analytics for iPad to make really intelligent, systematic decisions where you don't have to think a lot with your heart. It's mostly just following along with your head. It's certainly not a black box that excuses you from doing the due diligence. And there are some things you have to know outside of the program itself. But if you want something that's time-saving and that is systematic in its approach that will allow you to make buy and sell decisions in a very logical way, Chaikin Analytics for iPad is powerful, portable, and profitable. We'll see you again next time. Good trading.